All right. Oh, Jesus. Another installment of whatever this is. Cool. So I want to talk about what was it? Business tax, residency, Europe, dividends. Okay. So if you have the ability to work from anywhere in Europe, let's keep it to Europe because it's simple. Within the EU, you first of all, you're an individual or you have your business, say, you think about, okay, where should I go which has the lowest tax burden, because this money that I can make can be anywhere, um, and maybe you're at a point in your life where you're mobile, so okay, I'll go anywhere where it's more suitable, where more of the profits of the company can stay within the company and that can be more self-sustaining, etc. Now the issue is you have the where the company's based, and you have where you are based as your tax residency, um, and then you have how you get money between yourself and the business. And that's just what I want to just cover basically. So the key point is you need to look at business tax. Now, business tax it's varied because there are some countries where they're quite low. Um, Ireland, Bulgaria, and Hungary. It's like 9, 10%. It's quite low. But the issue with those are if you also have your residency there, their personal income tax is quite high. So you might have heard about Bulgaria, like, oh, Bulgaria is great. It's 10% corporate tax and 10% personal income tax, which it is. But if you're a resident there, you also need to pay social tax. And I think that's like 20, 15, 18, 19%. I think it bumps it up. So you got to pay that on top of your personal income tax. So it's 10% plus another 25-ish percent. I think it comes down to like low 30s or high 20s. So that in itself isn't super great, because what happens is you pay. So you have your company, you declare your profit for the year, you pay 10% on that, with corporate tax rate on that, and then you can pay yourself as a individual, so you don't pay tax on that because you're like an expense. You can also take the money out as dividends, and that you still earn as income, so you get tax double there. And then some countries they have a dividend tax, so you pay the do they have a dividend tax? Yeah, well, they have some of them have a tax that the company pays to for dividends to leave the company. So it's kind of like every single part sort of tax in there and then out there and whatnot. So I think I've done a bit of reading on it and like digital nomad or nomad blah blah blah. Basically, it's the I mean, for me personally, I want to have my residency in the EU, um, and the company in the EU, because you need like an EU VAT to do business here, and it's just so much safer. I mean, you could in theory be a resident of a tax haven, for example, and then don't pay any money on that tax, or the tax that you earn, and then have your company operating in another place, and then it pay you money out, and then you need to think about withholding tax. So withholding tax is where company makes a payment that goes outside the jurisdiction, or they have different rules with different countries. So, for example, if a French company is paying a Panamanian company, there'll be a withholding tax of, don't know what it is, 20 to 30%. And basically, they're saying it's a way for them to sort of protect capital outflows to these tax havens. So, withholding tax is also a big issue. You need to think about where is the money that I'm getting from. That's why in Europe there's no real withholding tax within Europe, because it's all part of the EU system. So, if you have a company in Germany and you're getting paid from a source in France, the money just flows. It's not a problem. You don't have to declare anything or withhold tax. Now there is an interesting country in this called Estonia. I sort of looked into it a few times, and I think it's leading in my head for where I should move my company. Um, but not my residency. Now, Estonia has a corporate tax rate of 20%, which is higher than those other countries I mentioned. But in Estonia, they only tax you when they don't tax you on the profit per year. They only tax you when you move the money out. So when you pay dividends, you pay 20%, or where you pay an employee gets funds, capital funds, an income, you pay 20%. So what you could do is then you could live in a place where you have a certain low amount of um, um, like tax-free threshold. Um, different countries. The one that I found a quite high on is in Cyprus, or was it Malta? One of them has it about at 20,000 euros. So you can earn tax-free up to 20,000 euros per year. Above that, it sort of kicks in and ratchets up to 40%. But up to 20,000, it's tax-free. So then you could pay yourself out from Estonia um, as an individual, and so you'll be paying yourself as an income. So that's fine. That's not. I think that's not deemed as a distribution of profits. What is deemed is, yeah, basically dividends, really, or any making any kind of like, yeah, dividends. So yeah, what else? Most countries they have this 300 no, 180 3-day rule, where when you're in this country for more than that amount of time, you become a tax resident. So I've noticed that a lot of people say, okay, well, go get your tax residency at a low income place, and then move, and then you have to move more than once or more than twice a year. So you have to make sure you're in the country and then out before you legally become a tax resident. So then you're always having that first country as your tax residency. Now, I mean, in theory, like the last year I've moved to many different countries, and none of them, the ones that I've lived at, would define me as a tax resident. And my original country, I haven't lived there for a year, so I wouldn't really be a tax resident there either. But that's the only place that I have. That's also where I have my bank account and my current company. Now, the thing with the bank account, it's all to do with the money. So how you hold your money. So you could be, in theory, like I said, you could have no tax residency, but you got to have your money somewhere. And whenever that money is, it's probably going to be your tax residency. So you could travel the world for a decade and just hopping countries around. But wherever you hold your money, that's going to be your tax residence, because that's the only place where it could be, and that's where you hold your money. So that's where the tax authorities can see it. Um, and to have a bank account, you need to have some kind of relationship with the country. So you can't really, there's no such real thing as like a borderless country, a borderless cash or account per se, because when you have a bank account, you have that root in something. Now, maybe that's why these cryptocurrencies are so popular, because you could then, in theory, put all your money into a crypto account, get rid of your actual bank, close it down. They'll think that you've left and gone somewhere else, and then you'll be a tax-free individual. The issue is once you get paid, they need to pay you. I guess then you have to accept money in cryptocurrency all the time. And then what are the tax implications of that and everything? So they'll pay the cryptocurrency. They'll have an invoice. Yeah, but it's difficult because without EU VAT, so then they'll charge VAT to you. And then if you sell, so the industry that I'm in is sort of between people. I'm not the end customer, or I'm not a contractor. I sort of hopefully will have stuff made for me and then sell them to someone else. So when that money comes, when I need to pay, I guess you can pay with cryptos, and then when I sell that money off to other people, sell the products off to other people and get the money, that'll come. Yeah, but they need to invoice, and there needs to be a VAT. I haven't really thought about it. I just thought about it just then as a way to have all your money on the crypto. The problem is it's just so fluctuating like crazy. It's unstable. I mean, you could work for a few years and have your savings all up, and then it's all gone. Um, But I guess maybe that's one of the appeals with these cryptos. I think I could imagine that would be an appeal for the people that want these borderless accounts, that they want to be able to use them. It's just like having crypto, just really difficult. I mean, how do you get money out? Here in southern Spain, you can't go to ATM. What you could like pay somebody and then they give you money, PayPal. I don't know. But anyway, it's just a thought. But yeah, I mean, ethically, something about ethics now. So a lot of these people that are doing these digital nomad lifestyles, they all have their health insurance. So they pay, like this like traveling world, whatever health insurance. So they're paying for their health insurance. Now, I still have my residency with Denmark, where I came from. So I am everything that I produce still is bound to them. And fine, that's ethical, right? Now, if I ever decide to leave for a non-country, a country that doesn't exist, or to be on the whatever, the nomad thing, I mean, then I would lose that coverage, right? Because I don't have the dependence on them. I wouldn't have the residency card or whatnot. So then I would just take a private insurance. So what is the ethical ethics behind that? I mean, so you're not paying tax, you're not paying into a country, but in saying that your health is covered, so anything happens to you, you're covered. And when you're in countries, visiting countries, you're paying their VAT, which in Europe seems to be around 20%, and Denmark's 25%. So you're paying your way, and they treat you like just a tourist or someone coming for a few months here and a few months there. I'm not sure if ethically there's so much of an issue, and would the countries have an issue with it? I mean, so I know Denmark, it says that you can only leave only when you've severed. It's not when you severed ties to Denmark, but when you've created enough ties in another country. So I'm still a tax resident in Denmark because I haven't lived in another country for more than 6 months, 183 3 days. So until I do that, and the thing is, I wouldn't really be able to do that. So the only way to get around that would then to move everything over to cryptos and then just say I'm leaving, cut it all down. And then I don't know. Maybe I'll think about it. Got to see how it works with these companies. So yeah, okay, I want you to make these goods for me. I'll pay you in this money for this account, and then I need to sell that on. It's complicated. I think if you were a contractor, it'd be more simple. Yeah. Let's go back to the ethic part. So you're a contractor and you're getting this money. You're working in Bulgaria, getting all your money into your crypto account, not paying tax to the Bulgarian authorities. You are paying consumption tax, but not um, corporate tax. And you're earning money from abroad, say from the States, where you're a contractor and helping write code or something. Um, so the question is in the US, are they paying withholding tax? So if they're paying withholding tax, that is not a problem. If you're paying tax, the money is being taken out there. The only issue is if they're not paying withholding tax, and then the money they pay you is a deductible expense. Yeah, don't know. It's like the gig. It's like the underground digital nomad gig economy. But cool. I'll leave it there. I really don't know much more than that. But check it out. It's definitely not as simple as people think. People are like, oh yeah, I'm going to be a digital nomad, just move here and make a company and then pay this there. But all of it's difficult. All of it. I mean, even Estonia, one of the easiest countries, still need to rock up in person. I still need to book a plane ticket and go there and be like, this is who I am, which is fine. I'm not complaining about it, but you still need to do so. I mean, Cyprus, best country, once you're there for 60 days, you can be there, a tax resident there. But you need to like buy property in Andorra. You need to buy an apartment for €500,000, and like they all have their own things. It's not a easy process by no means. But it is a good start to think about if you don't have any roots anywhere or you're open to the suggested movements, where you should go and how you should do things, and And I mean, if you're paying taxes and you're getting services for the taxes, that's completely fine. So if you're in Bulgaria and you're paying your 25% for the healthcare, that's fine. But if you want your private health insurance or whatnot as you travel around, then it's super annoying to pay 25% for something which you barely use because you're traveling and say outside the EU. So yeah, yeah, that's cool. I'll live with that all times.